Stock futures were slightly higher on Friday, October 13th, as the third-quarter earnings season powered on with Bank of America Corp., BAC and Wells Fargo Co. WFC reporting their quarterly performances. Dow Jones Industrial Average futures were up 0.14%, S&P 500 futures added 0.13%, and Nasdaq futures increased 0.19%. Markets fell shy of new records a day earlier with just small losses. Bank of America posted higher quarterly profit than analysts estimated, driving shares 1% higher in pre-market trading. Increasing interest rates fueled returns on lending enough to overcome sliding bond trading revenue. Earnings of 48 cents a share rose 7 cents from a year earlier and beat estimates by 2 cents. Net income increased 13% to $5.6 billion. Revenue from trading bonds, currencies and interest rate swaps fell 19% to $2.15 billion at Bank of America, J.P. Morgan Chase Co., JPM and Citigroup Inc. Both saw a drop in trading revenue over their third quarter. The two reported earnings on Thursday, and officially kicking off the third-quarter earnings season. Citigroup is a holding in Jim Cramer's Action Alerts Plus charitable trust portfolio. Want to be alerted before Cramer buys or sells? See Learn More now. Wells Fargo fell 2% after reporting a drop in earnings over its recent quarter, a result of a one-time charge tied to mortgage investigations. The bank earned 84 cents a share, down from $1.03 a year earlier. Analysts anticipated earnings of $1.02 a share. The one-time charge amounted to 20 cents a share in litigation costs. Revenue declined 2% to $21.9 billion, also missing estimates. Over the past year we have made fundamental changes to transform Wells Fargo as part of our effort to rebuild trust and build a better bank, CEO Tim Sloan said in a statement. The bank has struggled to right itself after a string of consumer sales scandals over the past 12 months. Just 6% of S&P 500 companies have reported earnings so far, the majority of which have bested earnings and sales estimates. Analysts anticipate blended earnings growth of 4.4% in the third quarter, or 2.3% excluding energy, according to Thomson Reuters estimates. Revenue is expected to rise by 4.4%. Consumer prices rose in September, though the core rate of inflation remained stubbornly below the Federal Reserve's 2% target. The Consumer Price Index increased 0.5% last month, according to the Bureau of Labor Statistics, 10 basis points below estimates. Year-over-year, consumer prices rose to 2.2% growth from 1.9%. However, excluding food and energy, core prices increased 0.1% and held flat at 1.7% on a year-over-year basis. Inflation trends remain a conundrum to Federal Reserve members. According to September meeting minutes, some members grow concerned low inflation readings could prove more persistent than transitory. The Fed has still signaled that it expects to hike rates again by year's end. Consumer spending made a comeback in September. Retail sales increased 1.6% in September, according to the Census Bureau, reversing a 0.1% dip a month earlier. Analysts had expected a slightly faster pace of 1.7%. Excluding autos, sales increased 1% faster than an anticipated increase of 0.8% and 5 times the pace of growth in August. Health insurance stocks such as United Health Group Inc., UNH and Aetna Inc., AET were mixed in pre-market trading after President Donald Trump made his biggest move yet to dismantle the Affordable Care Act. The Department of Health and Human Services moved late Thursday, October 12, to cut off subsidies to health insurers under the Obama-era Affordable Care Act. "We will discontinue these payments immediately," said acting HHS Secretary Eric Hargan and Medicare Administrator Seema Verma. The White House said in a separate statement that the government cannot legally continue to pay the so-called cost-sharing subsidies because they lack a formal authorization by Congress. Halting the payments is likely to trigger a spike in premiums for next year, unless Trump reverses course or Congress authorizes the money. The next payments are due around October 20th. Updated from 7:41 a.m. ET, October 13th. More of what's trending on the street. Join us in New York City on November 30th for the Deal Economy Conference, where leading industry experts and other influential members of the deal community will gather to discuss key issues that will confront dealmakers in 2018. Join Jim Cramer, CNBC's John Najarian and other experts October 28th in New York. Jim Cramer will host CNBC's John Najarian, TD Ameritrade's J.J. Kinahan, famed analytics expert Mark Chaikin and other market mavens on October 28th in New York City to share successful strategies for active investors. You can join them as they discuss how smart investors can make the most of options trading, futures contracts, fundamental and quantitative analysis, and great ETFs to buy right now. Participants will also get a chance to meet Jim and other panelists and take photos. One Saturday, October 28th, 8 a.m. 3 p.m. Where the Harvard Club of New York, 35 West 44th Street, New York, New York. Cost special early bird price $150 per person. Normal price $250. Click here for the full conference agenda or to reserve your seat now.